Hey there, traders, and welcome back for episode number 88 from the StockBandit.tv. It's a place you can always find trading videos to make you better. So in this episode, I want to tackle a question that I actually receive very frequently, which is how do you set your stops for your trades? In fact, I'm actually going to make this a mini series of videos, and this is just going to be part one. So be sure and come back often for the next few segments of this series. Now, many of those people that ask me about stops want to know if I have a designated percentage or something that I set my stops at for my entry price. And the answer to that is no, I don't. Rather, my answer is that it truly does depend on the trade. And that might sound like a little bit of a cop-out answer, so let me have a chance here to explain that. On the one hand, there are day trades which get a tighter stop by default. So that's because an intraday trade has only hours to make a move at the most. So to give it a very wide stop of, let's say, 5% is a ton of room on most stocks, and that's too much in my opinion. So for day trades, I'm more prone to designating an initial stop that's somewhere between 1 and 3%, okay? Again, that's going to be dependent upon how lively the stock is. So if it's shown the propensity to make, 8 to 10% type of moves in a day, not including gaps, then it's likely to fall at the upper range of that 1 to 3% risk amount. So let's take a look at an example. Here's a letter X. This is US Steel. This one has been moving a lot lately in both directions. And that would involve me giving it a little bit wider stop due to the added volatility that this stock has had lately. But if we're talking, on the other hand, about a stock that typically trades, let's say, or typically moves, let's say 3 to 5% on a given day, say something like T-Row, that's T-R-O-W for those of you wondering, then what I'm going to do is I'm going to be prone to setting an initial stop that on that type of a day trade of, let's say, 1 to 2%. So I'm going to keep a little bit tighter rope on, a shorter leash on this kind of a setup, and therefore less freedom of movement because it tends to move a little bit more methodically. So the key here is really my risk to reward ratio. I want to be risking a fraction of what I expect to make in the trade if it works out. I like to see a gain that's 2 to 4 times that what I'm risking. So if I'm risking 1% from my entry, then I'm going to be looking for 2 to 4% if this trade actually works out and is profitable for me, okay? Now, for the multi-day swing trades, obviously my time frame on those is farther out, and that means a couple of different things. First, there's going to be some gap risk in that news could actually come out like an upgrade or a downgrade or some kind of company-specific news that could directly move the stock. So I want to allow for that, and I want to be aware of that if I'm looking to swing trade a stock. Second, the stock's going to have more time to make its move, so it could make a run of double-digit percentages in just a few days, which also will necessitate setting a wider initial stop. If I'm looking for a larger move, then I'm going to be needing to give it a little bit more space to fluctuate in order to get that kind of move without getting shaken out too quickly. So in the case of swing trades, what I'm probably likely to do is I'm going to most likely have an initial stop somewhere in the 3 to 6% range, okay? So what that's going to do is, again, allow me to give the stock some freedom of movement, and yet I'm still going to be limiting my downside just in case. And again, I'm going to be looking for a multiple of that for my profit expectation if the trade works out. So the specific number, again, is going to be based upon the character of the stock that I'm trading, how often it tends to gap, and just the overall price action and how it behaves. And one last point that I really want to make here is that my personal preference is to keep my stops pretty darn tight. One of my keys as a trader is to just manage my risk well, and that includes not letting any single trade get too far out of hand by giving it just too much rope or too much room to move against me. And those of you who subscribe to the premium videos are familiar with that style. So there we go. There's part one. So in the coming episodes, I'm going to touch on a few more aspects of this. Several more general topics on stop losses will be ahead, and so be sure and return for those because you don't want to miss them. Thank you again for joining me. I will be back soon with another video for you, but in the meantime, trade like a bandit.